And retail sales accelerated by 4.2% in January, well above market expectations, with clothing, footwear and general dealers leading the strongest annual growth in 6 months.
Retail sales volumes for January overshot expectations, coming in at 4.2% year-on-year after having increased by a revised 2.5% year-on-year in December. On a month-on-month basis, sales volumes were up by 0.9% in January from a 0.5% decline in December. The January gain suggests that households benefited from easing inflation during the month. While inflation eased further in February, retail spending could come under increasing pressure as higher oil prices, driven by the Iran war, filter through the economy. South Africa imports the majority of its crude oil and refined petroleum products, meaning global price spikes could raise domestic fuel costs. Higher oil costs will lift transport and production costs, which retailers typically pass on to consumers through higher prices for goods, including food and everyday essentials. The current under-recoveries in petrol and diesel suggest that we could see sharp price increases in April. The rise in fuel-related inflation could constrain household disposable income for consumers that may already be stretched. Sustained higher oil prices could also delay anticipated interest rate cuts, further tightening household budgets and curbing discretionary spending. The bar for rate hikes is very high, in our view, while the SARB will likely only consider cutting interest rates once the war has ended. We expect the SARB to keep the repo rate unchanged when it decides on the path of monetary policy next.